Hi, everyone. Welcome to Analyze Your Trade, episode number 9 for October 24th, 2017. My name is David Kosmeter. I'm the creator of Timing Research, and tonight we will be discussing your trade ideas. Over the last few days, about 40 people have submitted up to 5 symbols each, and we are going to be talking about some of those tonight. I developed the show with Dean Jenkins of Follow Me Trades, but he is off this week as moderator, so I'm going to go ahead. So I have Matt Buckley here to moderate tonight, and I am going to go ahead and turn it over to him.
Thanks, David. I appreciate it. Fausto is working through some issues, folks. I swear to God, I don't live in who was it? Kramer's house, man. I just moved in the Icon on Las Olas in Fort Lauderdale. I got a TV, I got a couch. I'm almost living like a college guy with the 2 cinder blocks, a board of wood, and a plant. But happy to come in to you from Fort Lauderdale. My name is Matthew Buckley. My call sign is Whiz. We'll get into that in a couple minutes. But very, very cool thing that David came up with the Analyze Your Trade. And as I said, Fausto Pugliese of CTU, Cyber Trading University. If you haven't heard of Fausto, you've been living on a cave on the other side of the moon here. But Jim Kenney of Option Professor. I know Jim from way too long ago, back in the day, my peak 6 days at Options House and the Options News Network and the SIBO, the CBOT, you name the alphabet soup. I know Jim very well. And I know Kurt, obviously, from T3 Live. Very good company, great company. Sean and Laz and his guys up there up in New York. So I'll tell you what, Jim, until Fausto joins us, Jim, why don't you kick us off with your, let's call it your executive summary. Hey, folks, This is where I came from. This is where I am right now. And this is what I do over at op.com.
Yeah, at optionprofessor.com for a very, very long time, I've been the content provider, which means basically I'm the guy who put together all their stuff as far as the content on the 7 DVDs that we've got that educate people on options trading. So basically it's going to start with the basics, intermediate, then advanced strategies, going to go over things like hedging, stock replacement strategies, bringing income in and cash flow, and all types of hedging techniques, and all types of speculation with limited risk, and a different spreads, calendar, verticals, you name it. And there's a lot to learn, a lot of moving parts, as Dave Landry always says. And so I try to give people a hand with understanding those moving parts, and I've done that for a very long time.
Awesome, Jim. And we'll throw it over to my buddy Kurt. He's at T3 Live. Great prop shop. Shit, they got a lot of stuff going on, Kurt, at T3 Live. Hedge fund, a lot of good stuff. Kurt, what do you do for T3 Live, and what's your background?
Hey, how's it going? Thanks for having me. First time on this Analyze Your Trade, so excited to be part of this. As far as what I do, I mean, I've got my hand in a couple different things with T3 Live being focused on Forex as well as equities. I'm part of a trading room for equities. I also have a Forex newsletter, teach a couple different courses that we have. But, you know, really at T3 Live, we've got a little something for everybody, whether you're, as I said, interested in Forex, equities, options, whatever the case may be. And we have a full curriculum that will bring you from beginner all the way up through advanced, depending on where you fall within the spectrum of trading and where you feel that you need the most help to get to where you're going. So that's a little bit about what we've got going on here. I'm sure we'll get into a little more as we go on, but like I said, glad to be here.
Awesome. And as David said, Fausto's trying to work through some, I call them stray trons. Every time I tried to go flying in the F-18 Hornet, sometimes there was just something that wasn't working, and we called it stray trons. But the Analyze Your Trade it's a pretty cool thing that David's doing here at Timing Research, because he sent out, and let me pull up his little list, or actually it's on, an idiot, it's on the screen here. Oh, okay, whoever just said that, that's a good point. Let me, who are you? If I had $1 for every time I walked up to a woman and she said that to me, I wouldn't be running this right now. Let me, you guys can see my PowerPoint here. Folks, real quick, my name is Matthew Buckley. You guys can call me Whiz going forward. That's not offensive to me. I actually earned that call sign. I flew Hornets for the United States Navy for about 15 years. I got to fly, I got to fly in a MiG over Pakistan, which really isn't a MiG. Here, you ready for this? the Chinese stole MiGs from the Russians. They made their own F9, and then they sold it to Pakistan. So I guess I can't say I flew in a MiG in Pakistan. It was a stolen MiG. I got to fly with the Blue Angels, and in case you ever wondered, there's Kuwait. That's me and my jet. We're going back to land aboard the Abraham Lincoln. It was the first cruise with women, so we actually called it the Babraham Lincoln. But if you look underneath this aircraft, that's Kuwait. If you looked, we're looking east right now. If you looked, if we were looking beneath this photo to the west, there's nothing there but desert. So there's Kuwait. It's a parking lot, in case you wanted to know. But I applied everything that I learned teaching my folks at TGO how to trade. That I learned flying a fighter aircraft, having a strategy, implementing a checklist, a trade plan, having discipline, knowing when to eject out of a bad situation or a good situation for that matter before it got worse. And to be honest with you, I mean, Peak 6 was an incredible time. It's one of the largest volatility arbitrage firms in the world. I helped start a hedge fund when we were there. I helped build Options House, which has been totally by E-Trade. I don't even talk about it. And I felt like Valentine in trading places, although I was not African-American. And I was also the founder and CEO of the Options News Network, ONN.TV. So I had a great time doing all that stuff. So that's me. Sorry about that. Everybody's like, okay, they introduced themselves. What about you? Sorry about that. So let's go top of the order, guys. And here's what's cool about me being the moderator. I got to be honest with you. I don't talk about symbols. I don't know. So, ladies and gentlemen, if I got to, and David, or I'll look at my email, I got to scroll down, dude. I'm like in the 10th batting order, or I'm not even a baseball fan. I'm down the list to things I'm smart about. So, I'll throw it over to my partners in crime here, because Jim and Kurt. Let's at least start with the first one that David tees up here. That the participants. I got to be honest with you. OCLR Inc. Hey, dude, go ahead, man. I can't speak to this one, so I'm going to moderate. So somebody go on this one, because I'm going to sit on the pine.
Well, on OCLR, I think that's what it's called. Again, I'm not an owner of it, and I'm not exactly following it. So I'm just going to give you some of the things that I would look at if I was looking at the stock, and
Perfect.
give you a little bit of
Jim, I should have said it like that. Not going to sit on the pine, but that's a great way to put it.
So tail the tape like they do when two boxers get together and you haven't seen them fight yet, so you want to know how long their arms are and what their neck size is. And so when I look at some of these stocks, most all of them actually, since I don't own them, as I see most of the stuff there, I'm going to give you what I would look at using just my opinion, my experience on the tail, the tape of these things. So let's give a quick look here at OCLR. And obviously, it's a company dealing in networking. And as I look through some details on the stock, basically, it's 1.41 billion market cap. It has got basically some pretty skinny volume lately. 50-day moving average of volume is 5.2 million shares a day. Today it only did 3.5 million, it looks like, and the 200-day average is 8.8 million. So the volume's been drying up. I don't know if that's good or bad, but that's what it's doing. And then you've got the moving averages. The stock is trading at 852. The 50-day moving average is 857, so it's underneath that. And 911 is your 200-day, so it's trading underneath that. And the 50 is inverted to the 200-day, so that's not the greatest thing in the world to see. So this one doesn't look so great to me. The one thing that might save you here is the short interest, which is at 26% of the stock, which means Tom, Dick, Harry, and Uncle Joe are pretty much short this thing. And if they could poop out some news to get people to cover those shorts, maybe they could get above 9 and 10. And if it got above 9 or 10, then I would give it another look at that point. That's my 2 cents on that stock.
Well, Jim, I'm coming back for 4 cents here, man. You owe me another 2. A lot of folks at TGO, when I say, hey, it's a short squeeze, I spend another 20 minutes explaining what a short squeeze is. Give us your executive summary of what you meant about that. What the short interest is very high.
Short interest can have many Yeah, can have many spots like a tiger, right? Some of the shorts could be doing shorting against the box, which means basically these guys may have stock they can't sell, so they're shorting stock in type 3, so they can basically freeze the value, and then when it opens up for them to trade the stock, they cover both sides, and it's done something to collect their values. Other people are speccing that it's going to go down, so there's a lot of wide variety of reasons why people are short the stock, but 26% short interest is a significantly higher area of short interest. I've seen higher, but 26 is certainly a high number. What that means is that if something instigated these people that are short to either take off their hedges or cover their shorts, the order imbalance that could cause, because obviously it would probably happen around news, that order balance that could cause could give you a nice little spike in the price. Might only be temporary, because if there's no order volume behind the short covering, it'll fall under its own weight. But 26%, there's a lot of negatives here. I wouldn't hang my hat waiting for Godot that the 26% is going to give me a rally. But I would just say it's the one-eyed man in the valley of blind with this stock, because everything else looks kind of
real quick, Jim, since you are an option professor, give us a 2-minute discussion of what a short squeeze means. So if there's a lot of short interest, like people saying, hey, this thing sucks and I think it's going to go down, and it doesn't, what does that mean? Because a lot of retail traders, they throw that, I call CNBC Comedy Central, because it is Comedy Central. But what does a short squeeze mean to you, and what should a retail trader know about a lot of that, a short squeeze or a lot of short open interest? If it goes against,
this is my view, my opinion on it is the short squeeze would be that something would instigate people that are short. Either they're hedging their stock and they're going to take their legs off, their hedge off, or they're shorting as a speculative move. And in this case, there's a trend that looks like it's rolled over a bit technically on the moving averages. So there's people speccing on the downside. And if something would occur and they all want to buy back, and the guy who makes the market or whatever, how it works nowadays, somebody's got to take the other side of all this buying. See, when you're short something, you have to buy it to close out. So obviously, if there's a ton of people buying something to close it out and there's no sellers because the news just came out and it's wildly positive, the people that are willing to sell to all these buyers are going to raise the offer. And that offer can be raised very, very significantly. Now, again, if all of the volume from the buy side is just people getting out of shorts and there's no volume behind it, that's why short covering rallies can be short-lived, because there's no volume behind it to carry the torch. So basically, that's what the short interest can mean if the stars align that way.
Okay, perfect. Kurt, what do you think about OCLR and what we were just talking about?
All right, so I have my charts up, or a chart. You should be able to see it, and it's not something I would really look to trade on, at least not right now, on either a swing or intraday basis, and that's really just because of all the overlapping candles here. There's no clear trend. I mean, we're really just going sideways here. We've got this support above $8, but then we've also got, you could see a series of lower highs as well. So you could say you've got this this pennant type formation that's going on that could suggest a move lower. However, if you look at the larger time frames, the weekly, for example, it's more sideways and within a longer term uptrend as well, and that becomes more evident on the monthly. So I've definitely got some reservations about this moving lower, at least based on what I'm seeing here right now from the longer time frames. But at the same time, like I said, it's really not doing anything that has me overly excited about trading it one way or the other. What happened back here on Thursday of last week is somewhat interesting, because it gapped down, tried to break this support, but was able to recover. So there is a bit of demand at this level here, and we saw that come in, as I said, on Thursday. And with earnings coming up here November 1st, it's really one of those things I'd keep hands off on.
Yeah, I'm just going to do the Washington. I'm going to revise and extend my remarks. I agree with both these guys on this stuff. I'm actually waiting for number 2, which is more in my ballpark. So, but Jim, I'll leave off with you to go with the SPY first.
Matt, I think Fausto's here.
Yeah, I'm here. I was able to get in. Thanks, guys.
Fausto, with your damn stray trons, man. You got to bang that thing with a mallet. OCLR, Fausto, give us a quick 30-second executive summary about your background and what you do at CTU. And then if you have any take on OCLR, my friend.
No problem, Matt. Yes, president, founder of Cybertrade University. I've been educating people for over 25 years with the original cyber trading room, online trading school that started. So one of the original day traders, one of the Souls Bandits, and been doing it ever since and been on the show forever. And, thanks, guys, for listening in. Getting back to the OCLR. OCLR has what we call, kind of call it more like something called a Fausto flag. We call it an FF flag on the long-term chart. I don't know if I could be able to share it with you, but share my screen with you. Can I get it? I don't know if I can get it to go. But anyway, if you look at the OCLR long-term, it's at a major support levels right around here, around the $8. And it traded 3.5 million shares. It's not really a fun day trading stock. It's in long-term, I mean, compared to everything else, hasn't really done anything. But if you're looking for something to position in it, I think it's a pretty good buy here. I mean, it's got, like I said, it's got major support levels going back in January of 2017, March, May, got major support levels at $8, August, September. It keeps bouncing. It keeps going to 950. So good buy right here, a little bit uptrend. But other than that, not really a day trading stock. But if you're looking long term, if you really like it, $8, good buy.
Awesome. I'm going to punt on OCLR. Like I said, we talked about being a tale of two tapes and stuff like that. I'm leery about, throwing darts. I'm not a dart thrower. I'm an options trader. I'm a fundamental. I'm a techie. So I'll punt on number one. Number two, I'm gonna jump on, like you read about, and jump on magazine. But Fausto, I'll leave it. I'll kick it off with you since you're on here, my friend. SPY. Where are you with SPY? Yay, nay? I laughed, I cried. It was better than cats. What are you doing?
On the SPYs, I mean, we really don't day trade it. Dealing with a $256 stock, I'll punt on this one. I mean, long term, you see what's happened with the market. I think the Dow is, look, up 167 points again. I mean, this is like ridiculous. So, you could see Dow 25,000. So if that happens, SPYs are looking great, as a long term investment. Short term as a day trader, not really that much going on. It was okay since September, hovering around the 250, but it's not something that us day traders will focus on.
Okay, I'm going to save mine till the end here, but let's go with Jim. How are you feeling about SPY?
Well, obviously, it's a train going very, very strong on the upside. And when some things start making new highs, stepping in front of it until it stops making new highs is hazardous to your health. Having said that, we're getting really far away from what I consider the means here. On the monthly graph, 2,300 going on the 10-year monthly, 2,300 area is the mean as far as I'm concerned. On the weeklies, it's 2,400. And on the dailies, it's around 2,500. So we've come way up. People are saying that they have not discounted tax reform at all. I think that is not correct. I think they're discounting quite a bit of it. And I think that when you go through the even numbers, 2,500 we went through, going up about 50 handles or so is generally what has happened. And then they've had some kind of a pullback. So we went up here a little bit further than 50 handles above 2,500. And it's possible that Monday, where we made an all-time high and then close lower on a short-term trader kind of thing, might be worth a strangle look. And that's basically where you would look for a little bit out of the money call that's cheap, just so you can sleep at night, and then put some kind of a put action on there and see if this thing might roll over a little bit. It obviously, I've not looked at anything like this in a long time. But this week with the all-time high and then closing lower on Monday, and then today's action not really following along with the Dow. Russell looks a little dodgy, compared to the other ones as well. Transports aren't killing me. So you take a shot here and see if it'll roll over possibly, but definitely put a hedge on there, because if you're wrong, you're probably going to be very wrong. And that hedge with the call probably bail your butt out.
Well, Jim brings up a good point, folks. If you watch the market today, at one point the Dow was up over 200 points. The S&P was like, and the NASDAQ was like, how you doing? It was a 3M, McDonald's, and Caterpillar Dow today, folks. So just because it's triple-digit Dow doesn't mean the rest of the market's going to get dragged with it. So good points, Jim. Kurt, what are you thinking of SPY here?
All right. So, you know, when I look at this, I don't see it as being overbought. Looking at the daily here, I've got an 8 and 21 EMA, and it's just riding this 8 MA, and it's been doing that here for the last couple of weeks now. And so unless that gets violated, I really don't see any reason to be thinking about shorting at this point. And even then, it's still going to be above the 21, and you still got the 50-day down here. So longer term, it is still a very bullish trend overall. And like I said, even in the short term, I don't see it as being overbought to where it needs to pull back, or that you should even really expect it. The only issues, if you want to call them issues, I see are the fact that the Russell and the Qs have been a bit weaker. But even that being said, the Qs, they went from the strongest. I mean, back earlier in the beginning of the year, the Qs were leading everything higher while the S&P and the Russell was going sideways. So now the S&P is taking on a bit more of a leadership role while the Qs are taking a bit of a break. And we even saw the Russell picking up steam and led the charge a few weeks back. So we're seeing just a lot of rotation moving around overall. But if we go back to the S&P, one of the things that I do find interesting is if we look at the monthly, right, what we could do is look back here, and this is, you know, 2013 all the way through into 2015. We had this period of, I mean, only a handful of down months, right? What we could do is almost measure this move and say, hey, maybe we get something about equal distance to what happened over that 2-year period. And that, if we project it out, puts us up in the 280 area, roughly speaking. Now, I'm not saying that's where we're going and it's got to get there all in one shot, but that is something that we could see here, you know, by mid 2018. So overall, definitely bullish. And as I said, even in the short term, I don't really see much of a reason to expect a pullback, at least not until we break, at a minimum, this 8 MA.
Man, it's so frustrating. I mean, when you look at some of these headlines, guys, not that one, where is it? Not the ECB, like this one. This milestone elegantly sums up the U.S. stock market, guys, or this last paragraph in the journal. Where is it? What can we say about the 2017 market that hasn't already been said? Just remember that markets aren't always this calm, and a perfectly normal correction of 3 to 5% could happen at any time. You ready? If for no other reason, then it has become more. It's 11 months. 11 months since the last 3% correction. I think my daughter's lost 3 teeth in 11 months, folks. Here's what's terrifying about this market. But look at this. It seems like I'm the crazy guy on the I-95 exit ramp with the tinfoil hat and the end is near sign. He'll be right. This pullback was Jim Comey, who turns out to be a jerk. His pullback. Oh my God, Trump will be impeached. No, he won't. Here's some North Korea and Don Trump Jr. emails. Here's the fire and fury comment. And here's Steve Mnuchin and Gary Cohn should resign since Trump's a racist. Every pullback year to date and bounce off the 50 has been a political. It ain't been macro, folks. It ain't been the Fed. It's not been Mario Draghi and the ECB getting ready to pull back and have some tapering. It ain't China. It ain't anything. To Kurt's point here, who was it? What's his name from PIMCO? Mohammed Al-Arian from PIMCO last week said, short of a nuclear or shooting war with North Korea, this thing will just keep going up on momentum. Now, a couple things you can do here. First of all, I don't trade SPY. And let me disclaim for all the attorneys in the audience right now to do you proud. I'm not your attorney, your tax accountant, or your tax attorney, and I don't play one on TV. There is, and here's the big P word, potentially different tax treatment between trading SPY and trading SPX. If you come to TGO and take a test flight, you can look in the ready room. We've looked into this. It depends on your broker and a bunch of other stuff. I don't trade ETFs, guys. I trade indices. Why trade the IWM, the RUT? Why trade the SPY when you can trade the SPX? Oh, I get it, Whiz. I can do 50 contracts on SPY on one SPX. You don't understand math if that's what you're doing. Do me a favor and just at least Google treatment between SPX and SPY. But guys, I got to be honest with you. My strategic mindset right now is cautiously, and cautiously is bold, italicized, and underlined. I'm dancing, folks. This is musical chairs. Warn everybody in an ETF right now. You think, oh my God, this market is it's rolling over, Whiz. You will never get out of your ETF with the liquidity in the ETFs. So, folks, if you don't have some hedges on right now, or you're not trading spreads, when, not if this market, if you're, who is it, Governor Brown, Governor Moonbeam in California, you just think this thing just does that, God bless you. I hope it does for you. But when, not if, a 3 to 5% panic happens, there will be zero liquidity to get out of a trade. I guarantee you. The bid-ask spreads, you'll be able to drive an 18-wheeler through. So, agreeing with short story long, I agree with all these guys, man. Barring a 4 million people dead in Seoul, South Korea, this thing goes up. And if there are 4 million people dead in Seoul, South Korea, we don't even have a stock market. It's going to zero. So, all right, enough. Fausto, STX. Let's go to number 3 on the list. Do you have a take on STX?
SPX?
Sierra Tanga X-ray.
Yeah, STX, right?
Seagate.
Hold on. You got me? Do you hear me?
Yes, STX. Yes, gotcha. Loud and clear.
All right, so the STX trade had a nice
little
rally. It's trading, what, 38 right now? I don't know if you guys can see my screen. Can everybody see that okay? All right, so STX, I was watching it at the beginning of the year. It really hasn't been following through Seagate with all the other stocks that are out there. It had a nice little pop just a couple of days ago. It went from like the 35s up to 40. Hit major resistance levels right here. You can see how the stock just literally went right up to that major resistance. A lot of iceberg orders came in there, meaning a lot of high frequency trades came in, major resistance levels. Kind of not really doing anything right now. I mean, it's the most I could see it probably going and testing is maybe 42. Other than that, I think money's being well spent trading the. I think we spoke about in the last event, Matt. I mean, with all the hurricane stuff going on, the car industry has been awfully hot. I see more value tying your money in that than Seagate.
That's kind of a good point, Fausto, to blow your capital somewhere else. Let me ask our other brothers here. Jim, do you have anything on STX?
Well, yes, STX turned up when it got above the 32, 39 area, which was 50-day moving average. And the 200-day average is right around 40, which it might be trying to make a run at here, obviously. Has a big dividend, 6.49% yield. That's pretty big. And the short interest is around 14, 15%. So you're probably getting a decent amount of short covering on this move from 30 back to 38. But could run into some resistance at 200-day around 40. And like I said, that's about all I see on it.
Okay, I'll buy that. Kurt, anything on STX?
I mean, not too much more than what's already been added here. You know, as Fausto said, you did have the gap up into resistance. It was also into this gap fill from late July. So, you know, as far as how I and how we at T3 teach this type of approach, you know, trading gaps on an intraday basis, first of all, I mean, it was looking really good setting up for this breakout. Now, obviously, unless you were already long, you wouldn't have been anticipating that. But the fact that it was bottoming out down here and basing above these moving averages, it had the open gap, everything was suggesting it was going to move higher. All All right, whatever. It gaps up, hits this gap fill. So now you know that it's into resistance. At that point, I'm thinking, well, I don't want to buy right out of the gate on the open here because it is at this resistance. So I want to see how it trades here. I want to wait at least the first 5 to 15 minutes just to see what it's doing. And so if we go to the 15, right, it did try and move up, but that was short-lived. It then pulled back into this 8MA, at which point you got this bottoming tail, and that offered a good spot to get long, right, because you had the bullish momentum. The bottoming tail tells you demand is stepping up, buyers are coming in here, and it's off of this reference point of support. So that would have been a good spot to get long this STX, at least for a day trade. And as you can see, it did work out well. It didn't go all the way back up to the high of the day. Instead, it waited until the next day where it then broke out again. But then that too started to lose momentum. And at this point now, it looks like it could start falling back down to retest the low, the intraday low from back here on Monday. And if it doesn't hold that, well, then it could be all the way back down, pulling into this unfilled gap below. But that's just some insight into how I would have been looking at this on the day of the gap. But at this point, it's just a coin flip as to which way it goes. And in all honesty, probably just going to need some time to digest these gains and let these moving averages catch up before it does try to potentially make another run higher.
I appreciate that, Kurt. I'm not a big, when I looked at STX, I haven't followed it in a couple of years, but when you look at, on the trading platform, it says computer storage devices. There's a lot out there, man. So you want to go, if you're looking at something like this, guys, in my opinion, I'm a FANG guy: Facebook, Apple, Amazon, Netflix, and Google. And some of those ain't even tech stocks. I mean, you look at an Amazon, I used to fly for FedEx. I flew for FedEx for 10 months. I loved when Jeff leased 5 Airbuses to start they're either going to start their own FedEx or they're going to buy a FedEx and UPS. So look at a FANG over a Seagate, in my opinion. If you're trading it, listen to some of these guys. But strategically for me, I'm a FANG guy. And who was it? The Vanity Fair, or one of the Northeast liberal rags, had a great take on like a Bezos, Zuckerberg, Tim Cook, all these guys. Like, does one of them win? Does a couple of them? These also rans, like a Logitech, a Seagate. I don't know. It's a trading stock for me. It's not again, I'm going to punt. I'm punting on a lot of these because I'm only going to spat out exactly easy for me to say about the things, the ones I know. So I'll tell you what, let's go on to the next one there, which is T. Fausto, that everybody knows what T is, man. What's your opinion of T, short, long term?
This is a complete dog. I wouldn't be interested in the stock at all. I mean,
you might be on mute.
Listen, do you even know anybody that even has AT&T cell phone service anymore? I mean, just like they just reported that they lost literally almost over 90,000 subscribers they lost. I mean, and not only that, they're losing a lot of subscriptions. A lot of 97,000 I'm just seeing right here they lost, being second largest. You can see just by the stock alone what's happening. I mean, everything's going up and this is going down. I mean, it's got some major support levels. We'll see what happens right around here, around 33. Only at 34. I mean, you really got no choice. You're gonna have to hold it all the way down to that. But AT&T has just been an absolute dog. I mean, I think the last time I owned AT&T on my cell phone was probably, I don't know, maybe 15 years ago. I just don't. I mean, they're not really doing anything. So this is a complete. I would get out of this thing immediately. And if it doesn't go anywhere, your money's better well spent trading something else and put it in AT&T. So this is a dog. This is a scratch short.
I love it. I love that scratch short. It couldn't be. There's a summary slide right there. Jim, anything on AT&T?
Yeah, it had that rally up towards 40, and people got a little excited that it might be turning around, but obviously it's given it up all the way. People are holding on to Seagate and telephone because they're getting paid a nice dividend, 6.5 on Seagate and 5.5 on telephone. So if they don't mind their principal bouncing around here, and it did break under some 35 area, so that's not a good thing. If it comes back above 35, at least you'd have some feeling that it might be near a low point. But I think the only reason people are holding on to it is that 5 and change dividend that they're collecting.
Oops, sorry about that. I'm talking to myself. Kurt, how about you, man, with AT&T?
Yeah, not much more to say than what these guys have already said. It's definitely a beaten up, ugly looking name. You've got the weekly chart here, which is breaking under these lows here around 36. And at this point, I mean, really, there's a little shelf over here, but to be honest, this area here to me is done. Like, just don't even worry about it. I'd say that this can come even further down in towards this $32 range before it really tries to find any solid footing. So yeah, definitely something to be watching to the downside to just get continuously beat lower at this point. And especially if the market starts to weaken for one reason or another, this one might just really accelerate at that point.
Guys, like I said, I'm going to punt on this one. I'm not a big T guy. I'll jump on the Netflix train here. So we're going to go top of the order. Fausto, anything on? We're going to save some time at the end for what we like, but I'm not a T guy. Any of this stuff. If 1 through 4 right now, guys, at least for me, I'd rather deploy my capital in other places where I'm confident. But Fausto, anything on Netflix?
Matt, I'm the same thing like you. I mean, there's a lot more money better well spent than going out and risk $195 stock, but you know what? At the end of the day, people want to know about Netflix. I mean, listen, I had my brother here, because, he has a lot of stock himself and he owns everything. And we were talking about this. First of all, TV, I think, is going out of business. Everyone's watching Netflix. How many people do you know in today's society are actually sitting there watching TV other than, now that the cable boxes, they're charging you to watch TV. Everyone's watching Netflix. Netflix just announced one of the largest junk bond deals ever. I think they're going to be launching so they can fund some aggressive movies. They're looking at about 80 movies, 80 new shows next year, something like that. I read. It's just unbelievable. The stock is just unstoppable. I remember Netflix when it did its big conversion and they got rid of and they split the DVDs and the online show, and the stock got destroyed. But ever since that, I remember the stock being a 45. Look where it is. If you look at the long-term chart, in 2012, this thing with all the splits, this thing was down to $10. So it's on fire, and I don't see anything that's stopping it going any higher. They have the profit share, and but as a trader, unless you're looking to invest, Netflix is good. I still think it's a buy, but as a trader, as a day trader, it's not a forte.
Yeah, you just stole all of it. So everything he just said, copy and paste. Jim, anything on Netflix?
Yeah, like most of these stocks that are going nuts, you can throw out the P ratios and anything like that. You're just buying into a new age theme, and obviously this is a big part of the new age theme. Obviously you don't want to step in front of stocks that keep going higher and higher, but you do have a line in the sand that was created October 17th at 204, is trading 196. If you wanted to use a limited risk strategy, to use 204 as a line in the sand and see if you can get some kind of a pullback towards 180 or 160, which is where the 50 and the 200-day averages are. Under certain circumstances that might happen, but like you guys were saying, you forget about the movies and the TV shows and all that kind of stuff. These guys are just going right to Netflix to get that stuff. And maybe this Howie Weinstein story is one of those things that come out at the end of a cycle. And maybe the entertainment business is cycling another way.
Yeah. I don't want to get too political, but the God's got to be sitting somewhere laughing his effing ass off with not with the victims of Harvey Weinstein, but with the liberal hypocrisy of the disgusting people in Planet Hollywood. Ladies and gentlemen, Glenn freaking Close, what, a couple years ago when she won the Oscar, what did she call Harvey Weinstein? Does anybody know?
A hero.
A god. She said the word effing god, ladies and gentlemen. She held up her Oscar and said, Harvey Weinstein, you're a god. You know what she called Donald Trump? I didn't even tell you what she called Donald Trump. Now this disgusting folks, I am out of the entertainment stocks. Hollywood is done. Matt Damon and what's his name? George Clooney, like, oh, we knew that guy was a shitbag, but we were too coward to speak. Hollywood is imploding upon itself. You look for the other digital media platforms, folks. That's where you find your money, in my opinion. These, who was it? The Amazon head guys earlier this week got fired or got put on leave for sexual harassment. Now we're starting to look at Corey Feldman and all these people with Hollywood pedophilia. Stay away from these stocks, folks. You want to talk about a sin stock? Number 9 is Win. I'm an MGM guy. But anybody else, who did I leave off on? Jim, was that you or Kurt? Do you have anything on Netflix? I'm done with Hollywood. It really is Planet Hollywood, folks. They are a disgusting group of people, and I can't stand them. They can all burn. Lincoln, how was the play? What's that, Fausto?
And they're trying to tell us how to.
They tell you how to live your life, Fausto.
They say they're the ones protecting all the pedophiles and everything else. Meanwhile, they're the ones that are doing it. I mean, they must think we're stupid, but it's just unbelievable. You know what? I just tell everyone, and even my business, I tell everybody, just stick to what you do, and that's just do movies. You know, when they start getting into politics, this and that, you just like, you know, Michael Jordan said it the best. Even the other party buys sneakers. You know, so he's like, you got to be careful what you say. Just do what you do best and just keep your mouth shut. But you know, you don't hear about him anymore.
Yeah, even Disney's been getting hit, so Mickey Mouse isn't safe either.
Correct. It's well, we all know that Iger's wanting to run for president, folks, and that ESPN property. I'd be assured at Disney, ESPN letting the politics get in football. Guys, we could be here all night, man. This will get bad. But Fausto, I couldn't agree with you more, folks. I'd stay away from the entertainment stocks right now. What is
Disney's getting killed?
What the hell's the? Yeah, that's what I mean. I said I'd short Disney. Iger and ESPN sucks. Incredible.
But the only thing about Netflix, I want to tell you, Matt, it's a different animal. They don't really have a lot to do with Hollywood, you know, with all those big actors. I mean, they're more like the TV digital thing, and I just see that's a little bit different. But everything else, I totally agree with you. They're all, I mean, Disney, all of them. But
that's a great point.
You know,
that's a great point. Yeah, that might even be a counter trade to the sell some of the Hollywood guys, because it isn't. It's an on demand. You can look up and you can go find what you want. I'm saying with the studios that are trying to force stuff down your throat, like that Eco, whatever the hell's the name. This movie cost $100 million to make. Whatever the Eco movie was recently, it made $9 million last weekend. Something tells me, I'm no rocket surgeon, that it ain't making $81 million in the next weekend. So
they get crushed.
Yeah, Fausto's right, folks. The more they try and, there's two coasts, New York and Los Angeles, and they kind of forget about the rest of us in the middle here. But it's sad, guys, and it breaks my heart, so to speak. Kurt, did we get you on Netflix? Man, that was an epic rant. Did you get in on Netflix there?
No, but I'm good with what you guys said. I'm going to leave it on that.
I'm going to drop the mic on that, man. All right, then let's go to the top of the order, guys. Let's get IBM and Bank of America, at least a financial, and then I want to get a grab your trade, something that you're looking at. So Fausto, how about Big Blue, man? You a Big Blue guy?
Not really. IBM hasn't done anything. It's been, I mean, look, I'm showing you from 2014. The stock has just been stagnant. I remember the stock being $150 when I started 25 years ago in trading. It really hasn't gone anywhere. I mean, IBM is, I know they changed their whole business model, but it's just, you don't really hear too much about it as much. It's there. I mean, it had a really nice pop a couple of days ago, you could see it went from 145 to 160. That was one of the big things that rallied the market a little bit, but boom, it just came right back down and looks like it's filling the gap right there. So to me, this is like I said earlier, there's better money well spent than putting in IBM. I mean, it's what it is. And, that they should be the quote unquote blue chip stocks, but hasn't done anything. So I would just let it just move on and, take your lickings and move something else.
It's sad, man. It's like a Microsoft. I mean, you airdrop into Chad or Swahili, bump into a guy with a laptop. It's got Windows on it, but Microsoft ain't an Amazon, $1,000 stock. It's the same thing with an IBM, folks. Fausto's right. It's boring. I mean, it's almost, well, I was going to say a GE that's boring, but that GE's getting hammered into the lower 20s. It might be a buy. But Jim, what do you think about Big Blue? Are you a stodgy?
Yeah, I mean,
to
me, it looked like it had a turn. It looked like that low that we saw of 139 would be something that they could defend against. I'm not an expert on it, but I heard two words. It seems like it might be modernizing. One was the word cloud, and the other one was blockchain. They seem like they're getting involved in those two things. Seems like a lot of money potentially in those two things. So, I wouldn't beat it up here in the 150 area, but I'd probably wait to see if I got to pull back closer to 140, 145 or something like that if I could.
Okay, that makes sense. And Kurt, Big Blue?
Yeah, I mean, I would agree with what Jim just said there, in that the gap up definitely is encouraging. You had the big volume that came in there. It cleared what was resistance, so that's now should act as support. So a pullback into this area and some further stabilization, I think it's got some potential to move back up here. I mean, and if we do assume that it's going to start to trend upward, it does have room. I mean, even though it has on the longer term charts been more range bound, I mean, it's a name that has room up towards the 175, 180 area before it's really finding some longer term resistance. So, we'll see what it does, but it does look encouraging.
Yeah, again, guys, I'm not an go ahead, man. I'm sorry.
I was just going to say, if they do get ahead of the game, because that's what it's all about, to create that next big jolt in revenue, which they definitely need. If they can get ahead of the game in, the cloud stuff and in the blockchain stuff, that could be the, 5 years from now, the story that we should have noticed when they started mentioning those two things in their earnings reports. Yeah.
Correct. I got to be honest with you.
And they know how. They're not stupid people over in Armonk, New York. You know what I mean? They're not hiring out of who knows, junior college for the blind or something. You know what I mean? You got to be a sharp cookie to get to IBM. So I'm assuming they have some people over there who know what they're doing.
Sister Mary's of the blind, exactly.
There you go.
I went to grade school there. So anyway, guys. IBM's one of your, like I said, it's a Microsoft. To me, it's I get it. I get the story. It's their stock market. It's like, hey, Matthew, here's some GM shares. I'll put my shoebox that we'll put in we'll put up in the attic. I get they're doing cool stuff. You want to make money in a tech stock, you go into tech stocks. Google, an Apple, a Facebook, they're taking over the world, folks. When you read stories about how the NSA is teaming up with Google because Google's the information capital of the world, you look at an IBM like, I mean, again, like I said with the Netflix, if you're trading some of these things, knock yourself out. But I don't know. I deploy my capital into other tech names that make me get out of bed in the morning, like a Microsoft. I mean, Bill Gates makes what's the math, like $1 million a minute or something. It ain't translating into a stock. But all right, guys, we got 11 minutes to go. Fausto, we'll kick off with Bank of America. But what if you're not a Bank of America guys, fellas, so to speak? What's your financial pick right now if it's not Bank of America, Fausto?
Well, let me just take a step back and just repeat something about IBM. I just want to throw in there, just throw it out there. Let me tell you something. I've been through the 95 rally, the 2000 rally, the 2008, and now we're talking about the 2017 rally with the Trump bump. If your stock did not move from this huge rally, then you are really serious kind of issue. Could you imagine sitting there and everyone's talking how much money they're making, and they says, why is everybody else making? I'm not making money. If you're in a stock like that, and if you can't, if you're not benefiting from what's going on with this rally, what all these things have been changed that people are profiting from tax credits and this and that, it didn't go anywhere. That stock is never going anywhere. Actually, I'll be petrified when the market, if it does crash, that's probably going to crash the most. That's what I'm worried about. But getting back to Bank of America, you're looking at the chart. I saw Bank of America back in 2008. I was a big fan of it when it was at $6. I mean, you know, you could see it between all the reverse flicks. I mean, it's got a nice little pop and rally over here. It's always a safe stock. It just trades so many shares. It takes a lot to move the stock. I'm not a big bank guy. I kind of don't really trade the banks. I like more of the pharmaceuticals, and I trade more of the cars and stuff like that, mainly the pharmaceutical stocks. But I mean, it's doing all right. I mean, listen, it's a lot better than IBM, I can tell you that. But you know, it's breaking higher highs, which is fine, which is a good sign. So you know, once you break through the roof of a building, you know, that means the stock can go a hell of a lot higher than that. I mean, you got to go all the way back to 2008 to see where resistance levels are. So it looks like you're testing it right here. But if it does break this resistance at 28, you can see the stock going close to 35. And that's my take on it.
Okay. Jim, what are you thinking with Bank of America?
Yeah, well,
or
the financials, you know, the whole story there. Yeah, the whole story on financials comes down to a couple of things, really, as far as I can see. One is that they are not as leveraged as they were by any means, and they're going to increase their leverage because leverage lending regulations have been relaxed significantly, which means they can start buying each other's companies again, using the loans from the bank to do it. So leverage lending is going to be a big thing looking forward, and that's something they benefit from. And then if the rates pop, you know, because obviously the whole world is long all this debt with extremely low interest, and if wages start picking up or anything starts picking up and people want out of the debt market, the rates will rise and there'll be a bigger margin for their profits. So they're going to ride the same train. Citi, JP Morgan, Wells Fargo, and Morgan Stanley and Goldman Sachs, and it's the train. They made new highs today, so it's obviously a train that's gone, and it has a way better than even potential to keep going. So being on board that train, like, you know, some people are saying Citi, which was at 60, popped to 75, could easily go towards 86. And if that's the case, you know, Bank of America is probably going to be on that same train. But you know, only time will tell if all these things that people think are going to happen, because like you were alluding to early, was a couple of big risks in the market are liquidity. You know, everyone's in the ETFs, everyone's in the index funds, everyone's asleep at the wheel thinking they're in money market. And if they all want to get out, those instruments that are behind the ETFs and index funds are not that liquid. And so if they need to sell those things in a vacuum because people are doing a redemption run, that's going to be very disruptive. And the other thing that you mentioned, which is very true, is momentum trading. I mean, some of these stocks like Netflix, you know, they're a momentum stock, and a lot of them, you know, once and if they do stall out and want to pull back, you know, I don't know how liquid they're going to be if sizable people want to take something off the table. So, you know, momentum and yeah.
No, it's a great point, guys. Think about the momentum. You're talking to four individuals who do this for a living. We're tick by tick here, guys. If you're out dropping the kids off in the car line, or out at, you know, Winn-Dixie, Publix, Piggly Wiggly, wherever the hell you are, if you're an hour late to some of this, you're done. I mean, as professionals, when this thing turns, we're going to be, you know, butts and elbows trying to get out of this, guys. So I couldn't agree more. So I'm glad you're saying that. Kurt, do you have anything follow up on Bank of America or the financials?
You know, I mean, they definitely look higher. You got a monthly chart right here of Bank of America, and it's this month, which we're almost to the end of, believe it or not, is looking really good. I mean, breaking out after a multi-month, basically all year so far, consolidation. So the fact that it's breaking here now is an encouraging sign for the long-term trend. Now, that being said, I've got to believe some people listening in are more intraday minded, and these bank names, I mean, these names that are more closely tied to the indexes themselves, they're getting that momentum, which you just touched on, is hard to come by. So I think that some of these heavier weighted names to the indexes, unless you start getting some type of correction, they're going to be kind of off the radar just because they're not going to be that active. And that's where earnings season, which we're in the heart of, really comes into play, because you're going to get these gap up, gap downs day in, day out, that will provide you that intraday volatility for cash flow, while something like this you could really just sock away, and over the long term here, it looks like it's going to be doing just fine.
Okay, guys, I'm not a big Bank of America guy. I gotta be honest with you. Where am I looking here? Let me. I gotta be honest with you, folks. It's funny because some of my buddies that all of us on this panel probably know on Comedy Central, which is CNBC, are saying, if the tax reform is baked in and everything's great, folks. When my sister's a partner at Dune Capital. I've had dinner with Steve Mnuchin. I know Steve Mnuchin. Treasury Secretary of the United States says if we don't get tax reform by the end of the year, the markets will tank. It's kind of like North Korea or Iran saying, if we get a nuke, we're going to kill as many of you as we can. Here's how stupid we are today. We don't believe. You ready for this? David, here's your controversy. Make this an email header. Adolf Hitler was smart. And you ready for this? He lied. Does everybody remember that black and white film of Neville Chamberlain getting off an airplane with a piece of paper? It was blowing in the wind. He goes, ladies and gentlemen, I have a signed piece of paper from Neville Chamberlain, or from Adolf Hitler, that there will be peace in our time. Adolf Hitler's like, hey, you wouldn't believe what I just signed. And these guys believe it. Same thing here, guys. When the Treasury Secretary says, if we don't get tax reform this year, the markets are going to tank. How does this have to do with Bank of America, Whiz? Everything. If we get tax reform, folks, it's going to be great. Unicorns, lollipops, and sunshine, unicorn, whatever. I'm telling you, folks, look at this bounce off the 50-day moving average. And a little bit of a head fake. Is this for real? Oh, holy crap. Ladies and gentlemen, and I'm a partner with a guy. I know a lot of people who have said it's baked in here and this thing goes higher even if we don't get it. They're all mentally retarded. If Donald Trump or Steve Mnuchin are in the Rose Garden saying, hey, we tried to get tax reform passed, it didn't work, we'll get it down the road. This market is looking for an excuse to sell off 3 to 5%. It's a magnum. It's make my day. We want to sell off 3 to 5%. You need me to sell off 3 to 5%. This is a Colonel Jessup moment here, guys. If you don't think, and if you're smart, you know that after today, there's 14 trading days left. Not trading, legislative days left. If you think in the next 14 legislative days we're going to get tax reform passed and the market doesn't give a shit if it doesn't happen, you're nuts. So how does this have to do with Bank of America? I love the financials. Janet's going to get what is it, guys? The Fed funds futures rate is what, 90% for December? She's going to raise in December. But I'm telling you, man, financial, Apple, FANG, whatever it is, if he doesn't get tax reform passed, I love my buddy Barack Obama, right? A hope and change. This is the hope and change rally. We were hoping Donald Trump could repeal Obamacare, could do infrastructure spending, repeal Frank and Dodd. If he doesn't get tax reform, man, that is your excuse for a 3 to 5% sell-off. So I'm not going to talk about Bank of America, guys. I'm going to talk about a JP Morgan or a Morgan Stanley. I love those two. But I'm telling you, man, you might want to sit on your hands to see. We'll know. I mean, look at the Twitter fight today between, who is it, Bob Corker and Trump. We'll know if he's kind of like around Obamacare, guys, over the left side of my screen here where I'm circling stuff. Obamacare failure part 1 to repeal already aged off the radar. So I think we'll see the food fight if we're not going to get tax reform by the end of the year. But that's your reason to hide. So Bank of America, I really don't care about Bank of America. I'm a JP Morgan and a Morgan Stanley guy. I used to be a Goldman Sachs guy until Lloyd Blankfein started trolling Trump on Twitter, like on a daily basis. I'm like, dude, why don't you go worry about your fixed income, currency, and commodity division more than trolling Trump on Twitter? seller of Goldman Sachs, I can't stand it. I'm not a BAC guy, but guys, I had to vent about this rally right here and people out there saying tax reform failure is already baked in. So, Fausto, way too long a rant for me, man. Anything on that, or what do you like? We covered all the viewers' choices, and we got through a good chunk of the list. What do you like right now, or what are you creeped out about, man?
Well, listen, you know, I could just say amen to everything you said, because that was great. That is great. Listen, I was a big fan of being on the show. You know, be on the show many times. Big fan of all the car stocks. I knew we were going to talk about Tesla, this and that, but let me tell you that, you know, everyone's kind of forgetting that we did have 2 major hurricanes, and what happened to the hurricanes down in Texas and, you know, in Florida. These people all lost their cars, and they got to be replaced. If you look at GE, if you look at, you know, you look at not GE, I'm sorry, GM, GM. I mean, right, it went from 35 to 46. If you look at Ferrari, didn't do too much. You know, I've been a big fan of Ferrari since the hurricane, I guess, but it's just been a great stock. But Fiat, FCAU, they're all just doing great. So I'm still a fan of a lot of the car stocks, and also, you know, with the whole drug industry. I mean, a lot of these companies now, with all the regulation, I mean, I know everyone's worried about healthcare and this and that with Trump care coming out, but let me tell you, at the end of the day, pharmaceutical stocks, I mean, the FDA is getting off the back of a lot of these companies now, that now they have to wait so long to get FDA approval. Trump basically is trying to release a lot of that and get rid of a lot of the FDA regulations so a lot of these generics can come out faster. If you look at it, a lot of these pharmaceutical stocks have been flying. They've been all over my gainers list, just constantly. I mean, and every time you look in the gainers, and you start wondering, oh, what does this company do? Here's one, ATOS, stock went from 50 cents to $1.50. You know, when you look at it, here's another one, PTIs, stock was $1, went to almost $7. I mean, every single one of them, SSKN, they're all pharmaceutical stocks that are all in the big percentage gainers. So just keep an eye on them. You know, they're the ones that have been really taking off, and a lot has to do about the regulation. But those are the 2 industries I'm looking really focused on, pharmaceuticals and cars.
Awesome, Fausto. Copy, paste, print, man. I agree with everything that guy just said. He's a 500-pound braid, guys. Listen to that one. Jim, what's on your short-term radar, or anything that we didn't talk about that you like as a trade?
Well, as we went into this week making new highs on everything, you know, if you're in the stock market, like that gentleman from Allianz was saying, you know, this is a journey, not a destination. Enjoy the journey that we're on. But I think the thing to do if you're owning a whole bunch of stock and you don't want to raise cash at all is to definitely look at some put insurance going into the end of the year. Absolutely, no doubt. Investigate that. And the puts are cheap. You've got huge gains in there if you've been riding along. And to throw a couple of bones out there to ensure your gains is probably a very good idea. Or if you don't want to pay the premium and you don't think the upside's that tremendous, you could always look at the collar strategy, covered calls, and use the premium to buy puts. Absolutely a point in time where that might be very sensible. You made some good points about what's the likelihood of this taxing to go through in any kind of a form that they've been talking about, and the odds there are not that great. So then, again, if you have something like that come by, that could be enough of an instigator to get it to go. Short term, like I said earlier, we hit 2578 on Monday, all-time high on S&P and closed lower. Market went up 200 points on the Dow today. Didn't get anywhere near the 2578. In fact, we're now 14 points lower. And so is it possible that you're going to circle that 2578 in the short run and catch some downside here? It's possible. And using this strangle strategy, you do have a call above the market. So if you're totally wrong, which you probably would be if you're wrong on this, and it melts up on you, you know, that cheap call you put in there might bail you out. And being the 2-sided trade right now, because VIX down at 9, 10 or whatever, you know, that VIX jumped above 11 today. I don't think that's a joke. Tomorrow, I think it's going to be even higher. You start getting above 12 on the VIX, and you get all these people that have been sleeping at the wheel, you know, Doesn't take much. And the order imbalance, if something happens where people want to get out, is going to be pretty significant. So strangles and and portfolio insurance. So that would be the two things I'd have my eyes on right now if I was out there.
Jim, it's a great point, guys. How many people really sit in their kitchen every night and go, or once a month and go, oh my God, I'm losing so much money to USAA or State Farm with this auto homer life? You don't. Usually not write a check every month. It's usually on auto debit, so you don't even know about it. Folks, insurance is cheap right now. I got to tell you, I get a daily report from my buddies in a big building up north with 5 sides. You can do the math. These are guys that I've taught to trade options over the past 7, 10, 15 years. To a man and 2 women, they've all told me they are in cash, long puts, and long vol through December. Tell me. And that means, you know what, Whiz? This is all I'm going to tell you, and they don't have to tell me anything else because in my live trade briefs, I'm telling you, between now and the end of the year, something will happen in North Korea. And I don't think it's going to be good. Now, we could all sit here and say, well, it's 2 madmen with nukes. Well, as options traders, folks, Jim nailed it, man. Insurance is so cheap right now, you'd be an idiot not to get it. I have zero sympathy for you folks if the Dow, the S&P go down 30% in December and you go, Jesus Christ almighty, I should have. You're an idiot. Jim just hit it hard, folks, and I'm being very blunt here. I come from a fighter squadron where we're very, very blunt with each other. Get an ejection seat right now. This is a hold your nose rally, folks. Don't get me wrong. I'm Gordon frickin' Gecko. I'll bid this market higher like you read about. I don't care. But when this thing rolls, I will be safe. So please listen to what Jim just said, man. He said it. He says it naturally, and you didn't listen to it. I listened to it because I'm a guy who flies around with an ejection seat. It was natural, but folks, listen to me, please, and listen to Jim because he's trying to help you out here. Okay, Kurt, sorry about that interjection, but when Jim says stuff like that, guys, and Fausto, we all say the same thing, but we say it naturally. A retail trader, it's very hard to hear. But anyway, Kurt, what's on your short-term radar, or what's a good juicy trade you got for us, my friend?
Something I'm watching here is the U.S. dollar yen. I've got it up in the screen sharing, and it's come up to this long-term area of resistance here around the 114 level. And as I look at this, I mean, I'll change it all out to a weekly, and you can see it's come up here a couple times here this year already and been rejected. I think that this time it's got a good shot at moving through it because a few weeks back it tried to break down and that failed. It came up with a big wide range bullish candle. So based on that and the fact that when it did come up here again, it tried to move lower and failed, and instead it's hanging up here, leads me to believe it's getting ready to break out. So I'm going to be watching here for this U.S. dollar yen to not only break out of here, but head back up towards the 118 area and possibly higher.
Hey, Kurt, you do anything with that euro? Because I was looking at that euro when it hit 120, it looked like the end of the road, and it's rolled over a bit. Is it possibly the end of the road on the euro at 120, 121, and we could see it sell off big time?
Yeah, I'm looking here. I'll bring it up here. In the short term, it looks like it's at a pretty key point here because, I mean, you look at the daily and you've got this, what some will call a head and shoulders top. And if you look, right, you got the right shoulder, then here's your top area, and now here it is trying to break down. So if it breaks down, I think that's really going to be the nail in the coffin. However, if it holds here, then I think there's a good shot that it's going to try and bust back up through this 120, and even looking farther out into the monthly. I mean, this was just, I mean, you go back to 2014, and it was just ugly, right? And then it went sideways.
There, aren't they right around the 120 mark, though?
What's that?
The ones on the left side of your screen, are in that 120 area, 120 something, and that was support for a long time, and would that maybe be resistance on the spring back up here?
Well, the way I look at it, at least, I mean, you're definitely right. What was support becomes resistance. However, since we sliced through it in this way, I'm really not as concerned now on the fact that we pushed up here and we're hanging and we broke out above this more recent multi-year consolidation
Right.
leads me to think that, you know, if it comes back up to that 120, it'll bust
if,
through.
if it goes back to 121, then forget about it. It's off to the races. I just got back from Sicily. I went over to play some golf, and the reason I'm saying it is a lot of the Italians were complaining about how strong the currency is that they have to deal with now. And they'd almost like to go back to the lira, where, you know, a lot more loosey-goosey with money over there.
I'm sure.
You know, when the currency gets pretty strong, some places in Europe are not exactly jumping for joy on that.
No, that's for sure.
So we had the wine, and we had the Italian food, and we had the economics lesson all in one trip. It was a pretty good deal.
Not much to complain about there.
Oh my God! It sounds like the heads of the 5 families were there.
Exactly. I kept looking around for
John
Gotti's relatives, but John Gotti's relatives just would not come out that night.
Oh, that's awesome. Well, that might have been a good thing. Hey guys, real quick, my bearish trade is MGM. And I gotta be honest with you, man. I jokingly, tongue in cheek, tell my folks at Top Gun Options I wear 2 suits. I wear a flight suit. I'm an American. I served 15 years. I flew 44 missions over Iraq. Went to Top Gun, all that crap. So I got an opinion as an American. This breaks my heart. The shooting in Las Vegas, and I'm no tinfoil hat wearing, you know, guy on the exit ramp on I-95. But we haven't heard shit in 3 weeks. A guy with 2 machine gun nests. I'll leave it at that. I got buddies in the bureau, in the Secret. I was going to say the Secret Service. There's bad stuff going on. If the government ain't being very forthcoming about something, there's very bad. Here's my point. I'm very bearish on MGM. Less so on Wynn. But folks, did anybody see what happened after? Here's why I say I wear 2 suits. The other suit I wear, jokingly, because if I ever bought a $6,000 suit, I'd kick my own ass. I say I'm Gordon Gekko in my Armani suit. When it comes to trading, I want to make money. I don't give a shit about MGM. I think it sucks. After this shooting, we got bearish. And it sucks to say that as an American, but again, that's in my flight suit. In my Armani, greed is good and slicking back my hair from playing racquetball. Pound this shit into the dirt. MGM is going to have awful earnings from the last quarter, and there's no way on God's green earth on the conference call in 2 weeks they're going to say things are great in Vegas. Our earnings are going to be awesome next quarter. This sucks, and it's awful. And listen to me: if any Las Vegas casino hotel tries to implement TSA-like security when you check in, Vegas, as we know it, ceases to exist. Not that I'm speaking from experience that I've ever brought anything into a casino I wouldn't want somebody to know about, but think about it, folks. It will be over with. So the Vegas casinos have a choice. Either there's no security, or let's wand down people with metal detectors. Guys, I got a Glock. The thing's 90% plastic. I can get through it. So bearish on MGM, guys. That's my pick right now. It's sad. This wasn't even a dead cat bounce. Here's the holy crap, and then, oh, this is really bad. It didn't fill half the gap. If you're looking for a bear call spread, I think when the hell are earnings? November 8th. I think we put on a bear call spread out to November 3rd. You could try one out to November 10th. Just don't trade it through earnings, guys. But I don't think the CEO of MGM is going to sit on the. He can't be a politician. The sheriff, the judge, the congressman, the governor, they're all sitting there sounding like the Las Vegas Chamber of Commerce going, Vegas is safe. Come to Vegas. I know I do public speaking too, folks, keynotes, all that crap. I know 3 companies that have personally canceled. They are not going to Vegas. So if you're looking for a bearish trade potentially, I mean, when the market, the Dow's up 160 points, the SPUs are up 4.5. This is a bearish trade for me. I don't like to be bearish on MGM. It breaks my heart, but at the end of the day, greed is good, and it kind of sucks. But I'm bearish on this. So there's my Gordon Gekko moment, and also my I'm a fighter pilot moment. So Fausto, other than that, Mrs. Lincoln, how was the play? Over to you, my friend. How do we get a hold?
Yeah, no problem, everyone. You can find us on YouTube. I have some great samples of some day trading videos. You guys want to learn a little bit about high frequency trading. You want to learn about level 3. You want to learn about scalping and all that. But better yet, if just visit our website and register for one of our trials, and we'll invite you to our professional trading room. You get to meet the hundreds of day traders in our room. See if it's something that you want to do. So there's some great educators out there. And everyone's got something that, find something that's good for all of you, but you should definitely try a little bit of everyone's. Find what you like, because just remember, you're not going to need one mentor. You might need a few of them. So go out there, try it. And if you want to know about day trading, come visit us at CTU. Thanks for having me, guys.
You bet, Fausto. Folks, Fausto brings up a great point, man. It's a buffet. Walk up, you don't like the shredded potatoes, you don't like the salmon, whatever. Go up to the buffet and take a look, man. I've worked with all these guys throughout the industry at different points in my career, and they're all great guys. So walk up to the buffet and take a look. Jim at Option Professor, I know you guys do some great training. How do we get a hold of you or what you do at Option Professor?
Yeah, basically educating yourself on how all the different option strategies work is what the DVDs are all about. And like I say, as the market rises and rises and rises and rises, at some point you might want to know how to put a little bit of a hedge on. And so there are some hedging tactics that are definitely covered on one of the DVDs. Simply, you could email optionprofessor at optionprofessor@gmail.com. And if you have any questions, go from there.
Awesome. And Kurt, finally, man, T3 Live. Love T3 Live. We were partners for a while. Couldn't say enough good things about what you guys do at T3 Live. So, Kurt, how do we get a hold of you or what you guys do at T3 Live?
Yeah, for sure. You guys can email info@t3live.com. I mean, like I said before, we've got a little something for everybody. And, sometimes people don't know where to start or what they want to do. And so what we've actually just started is a Kickstarter program where it gives you an education in equities, options, as well as follow-up to keep you on the right track. I mean, it's not enough to just provide the education, as everybody here knows. It's in how you're implementing it and making sure you're staying on the right track and following your plan. And that's where the rubber meets the road. And so, like I said, that's part of why we put together this Kickstarter program for those who are interested in doing a little bit of both, but really not sure where to begin. So this whets that appetite for them.
Awesome, Kurt. Appreciate it. And David, sorry we went long, man. I'm easy to reach, guys. You just go to topgunoptions.com. We have a live event up here in Lake Tahoe in a couple weekends. I promise we're not going to go fishing with Fredo because he broke my heart. But we're doing a live event out here in Lake Tahoe, beginner, intermediate, advanced. You can take a test flight for the bottle of a cheap Pinot Grigio, which I'm going to go down here in Las Olas here in a couple minutes. So just go to topgunoptions.com and you can check out what we do for a quick test flight. If not, you can just shoot me an email, Whiz, W-H-I-Z, at topgunoptions.com. All right, guys. Kurt, Jim, and Fausto, appreciate it. Fausto, I'm glad you got on board, man, even if it was after we pulled out. David, I'm going to turn it over to you, my friend, and thanks again for having me host. I certainly appreciate it.
Yeah, thanks, guys. Just want to remind everyone watching, be sure to hit the YouTube subscribe button to get updates on future shows. Also, be sure to join us next week, October 30th, for the Crowd Forecast News, Monday at 1 p.m. Eastern Time. For that episode, I have Larry Gaines, Steve Lentz, Christian Fromhertz, Anka Metcalf, and Dean Jenkins on the lineup for that one. There will be no Analyze Your Trade next week. Analyze Your Trade will be back on November 7th. And I just want to thank all my guests again for this week. Fausto Pugliese of cybertradinguniversity.com, Jim Kenney of optionprofessor.com, Kurt Capra of T3Live.com, and Matt Buckley of TopGunOptions.com. Thanks, everyone.
You bet. Have a good night, guys.
Good night.